All right, what's up, future CPAs? Let's get right into it. Today, we're going to tackle a topic that is absolutely positively going to pop up on your LCPA. It's all about inventory costs, and trust me, by the end of this, we're going to have this whole puzzle solved. You ever walk into a massive store like Costco, look around, and just think, how on earth do they keep track of all this stuff? I mean, millions of products. It's not magic, it's management. And it all comes down to mastering the hidden costs that go way, way beyond the price tag you see on the shelf. So, here's our game plan for today. We're going to uncover the real costs of all that stuff. Then we'll decode the 6 big cost categories you gotta know. We'll touch on MRP, that's the system companies use to plan everything. And finally, my favorite part, I'll give you some solid retention hacks to make sure this info sticks in your brain for exam day. Okay, Section 1. You gotta understand managing inventory is this delicate balancing act, right? If you have way too much inventory, you're just burning through cash. But if you have too little, you're losing sales and annoying customers. So the absolute key is understanding every single cost involved. So let's put the main question right out there. This is what it all boils down to. What are the 6 categories of costs that come with having goods for sale? Before we move on, just take a second. See if you can name 1 or 2. Go on, give it a shot. And here we go. This is the heart of it all, decoding these 6 costs. I'm telling you, this is non-negotiable, must-know stuff for the LECPA. If you get this down, you are already way ahead of the game. And boom, here they are. Purchasing, ordering, carrying, stockout, quality, and shrinkage. Just take a look at that list. This is our roadmap for the next few minutes. So let's dive in and break down what each one actually means. First up, purchasing costs. This one seems pretty obvious, right? It's the price you pay the supplier for the goods. But, and this is a big but, you have to remember to include incoming freight, the cost to get those items to your warehouse. That's part of it, and it's almost always the biggest chunk of the total cost. Number 2, ordering costs. You know, I like to think of this as the paperwork cost. It's all the admin stuff, the time your team spends creating purchase orders, sending them out, processing payments, and then, of course, the labor involved in receiving the shipment and inspecting it. All those little things, they add up really, really fast. Okay, next we've got carrying costs. Now, this is where the really hidden costs live. We're talking about paying for the warehouse space, the insurance, the risk of stuff going bad or out of style. But the biggest one here, the one you have to remember, is opportunity cost. Think about it. Every single dollar you have tied up in inventory sitting on a shelf is a dollar you can't invest somewhere else. That's a huge hidden expense. And then the dreaded stock-out costs. This is the nightmare scenario. A customer walks in, ready to buy, and you don't have the item. Ugh. You obviously lose that sale right there. But what's worse, you might lose that customer for good. That's customer ill will, and it's a massive cost that's tough to put a number on, but it is so real. Number 5 is costs of quality. This is basically all the money you spend to make sure your product doesn't suck. It's the cost of preventing defects, checking products to make sure they're good, and when a bad one slips through, the cost of dealing with it. You know, things like returns, repairs, and worst of all, damage to your brand's reputation. And last but not least, shrinkage costs. So, what is shrinkage? It's the difference between the inventory your accounting records say you have and the inventory you actually have when you do a physical count. So where'd it go? Well, it could be theft, clerical errors, damage, whatever the reason, it's a direct hit to your profits. So with all these 6 costs to worry about, how in the world do companies actually manage all this? Well, they use sophisticated planning systems. And one of the biggest ones you need to know is called Materials Requirements Planning, or just MRP. Okay, the 2 key words here are push and forecasts. MRP is a push system. What does that mean? It means that based on a forecast, a prediction of what customers are going to buy, the company pushes materials into production to make goods that will then sit in inventory waiting for those predicted sales. Now this slide, this is gold for your exam. It perfectly shows the difference between MRP and its famous rival, just-in-time, or JIT. So MRP is a push system. It's based on a forecast. JIT, on the other hand, is a pull system. It only makes something when a real customer places an order. No order, no product. So remember, push versus pull, forecast versus actual. Lock that concept in your brain. All right, you've got the knowledge down, but what's the point if you can't remember it when it counts, right? So let's talk about how we make this stuff stick, not just for your next quiz, but for the long haul, for the actual LSCPA. This is your secret weapon. Forget trying to just memorize a list. Our brains are wired for patterns and shortcuts. So here it is, your memory hook for the 6 costs. PUCS QS. I know it looks weird, but say it out loud with me. PUCS QS. Purchasing, ordering, carrying, stockout, quality, shrinkage. Seriously, write this down right now. PUCS QS. That's your key. And here it is, your final cheat sheet. If you're cramming last minute or just want the absolute must-knows, this is it. Master the 6 costs. POCSQS. Know that MRP is a push system based on forecasts, and JIT is a pull system based on orders. And never forget the big picture. Managing these costs effectively is literally the key to whether a company makes money or not. Okay, I'm going to leave you with a question to chew on. We started with Costco, let's end there. Put on your consultant hat. You now know all about these costs, especially shrinkage. So what are 2 or 3 specific things you would suggest to a company like Costco to get their shrinkage numbers down? Think about it, because applying this knowledge is how you truly own it. Good luck with the studying.